Next, let's move to the placement of trend lines. Trend lines are very important. Now, granted, I don't draw trend lines all the time because I can just see them, and I only put them on the chart when they are necessary. I might get called out on another group that says, oh, you don't do trend lines. You always say support resistance trend lines, but you don't do trend lines. I only do them when they're needed. I don't want my charts to be overwhelmed. I want them to be nice and clean so it's easy to read and also easy to trade. So in reference to trend line placement, it works the exact same. We want to go on a higher time frame so we can see if we're on a lower time frame, we're gonna have all this noise, all this up and down. Like, where do I go? Where do I put my do I do my trend line here, or do I start here, or do I start here? Where do I do my trend line? So to reduce the confusion with anything, support resistance levels, trend lines, you want to go to a higher time frame. If this is too confusing, then go to a higher one. But right now, this one looks okay because I can pretty much see these trend lines. And what you want to do, same thing, magnet tool on. I always use the ray tool, which is over here, the ray tool. This one, it has 2 points. And what you're going to do is you're going to snap them in place. What I recommend doing is there's several different ways of using this tool whenever you're trying to find trend lines. One is the highest point. The other one is kind of like a midpoint or somewhere that you can get a trend line just looking a little bit better. Trend lines can be subjective, just like patterns. So here I'm using the very, very peak top of this movement. This is the highest point. I'm gonna go ahead and click here. Now I need to find my next point. My next point is going to be the next highest point, and I let it snap in place. Now, by letting it snap in place, I'm not creating any bias. I'm not trying to move it just a little bit more or trying to do something. It snaps in place. Now, what I can do is I could do a wick to a wick, or a wick to a candle body, or a candle body to a candle body, candle body to a wick. And all this, it gives us different variations of this trend line. Now, by doing so, what we're doing is we're actually creating a zone. You can call this a liquidity zone, sell pressure zone, resistance zone. As long as the price is underneath it, that's what all those zones are. If the price action's above it, then it would be a support zone. It would be a area of possible bounce. So it just changes based off of the position of the price action. So I did one line here. Let me do another ray from the very top to the, again, it snaps in place. There's nothing I can do about this. It snaps in place. If I want to use it, I'm just going to see what happened. Price almost came to it with the wick. We have some candle bodies that close here. Kind of went through it here, kind of sliced through that. Then we see the wick, and kind of slice through this. So if I wanted to, I could use this as a potential range, but then it gets kind of tricky because now the range gets very, very large. Now, this is something that you can find on, there's several tools over here. It's called the fan or Gaines fan, but there's a lot of fibs here that you can use to potentially get different levels. I like using levels that are existent. So this is what I do, but there's several other ways you can do it here too. I have this level, and this is on the daily time frame, so there's less ups and downs, and I can see it very clearly. This is my highest point, second highest point. Now, what I could do is, because this right here, it already passed, doesn't matter to me. So what I want to do is I want to use this wick, and I want to see where it lines up with this second highest point. Now, this creates a very tight zone for me, and this is showing potential area of a reversal, or we can say liquidity zone, selling pressure. Now, in addition to this, I also look at levels. Even though we identified this as a key level, this is also a very important level, because if the price action, a lot of people like trading buy the breakout of the trend line, it's a falling wedge, or whatever it is. If you do pattern, if you do break out of this, and let's do our magnet tool on, this is our key level right here. Let's go and put this in blue just so it can be different. We have a lot of candle bodies that stop right here. The more candle bodies that stop, the stronger it is. If the price, or rather because the price broke out of this trend line, I'm not entering. And we'll talk about entries later on the show. Price breaks out of this one, I'm not entering. Why? If you think about it, price will eventually break these trend lines. All it needs is time. Whether it's going like this, eventually it's going to break those. Or if it's going like this, eventually it's going to break. It doesn't mean that it's strong. It just means that it broke because of time. Now, what we want to do for our entry, and we'll talk about this more later in the show, is you want it to break a level. Because the price action could come up here, pivot, come down, pivot, come up, maybe even pivot again, come down, and then now do this. So once it breaks this level, now we're looking at possibly entering. But again, all that will be discussed in future segment of the video. So we went over trend lines. Now, as far as a trend line, let's go on a lower time frame. I love doing trend lines on a higher time frame because it reduces all the noise, the confusion, like where do I enter, where do I put my trend lines? I always go on a higher time frame. One thing I do want to say really quick in reference to trend lines, when we're on the bigger picture, we're looking at the macro picture of things. We're looking at the larger picture, and inside this downtrend is just like having patterns inside patterns. We have uptrends. What goes down will come up, what goes up will go down, and what goes down will go up. Unless it's a rug pull, then it'll just continue going down. But inside of this, if you want to call this a down, if you want to call this a falling wedge or whatever pattern you want to use, just know on the lower time frames, it's much easier to identify uptrends. So we come right here. Here's an uptrend. We were doing lower highs, lower lows. So what constitute as a trend? For an uptrend, we need higher highs, higher lows. This is an uptrend. As long as we don't break the lows, we're good. As long as we keep breaking the highs, we're golden. What is a downtrend? A downtrend is just the opposite. When we start going down without breaking the highs. As long as we break the lows, we're good. We're still in the downtrend. Now, when we go into the transition phase, and we'll talk about more about this later in the show, that's when we need to watch out because now there's a possible reversal. Now, one thing that I do want to show here, and all of this builds on top of each other. Here we have a trend line. So let's go ahead and identify this trend line on a 4-hour time frame. There's going to be moves inside the larger trend. So once again, with the ray tool, with the magnet tool, lowest point to this point right here, this gives us our level, our degree that we don't want it to break. Now, if it breaks this point, is it now a downtrend? No. This is saying that we might go into a downtrend, but we don't know. We don't know because it could stop here and reverse, break this high, break this trend line, and then continue upward. These are just levels of areas that we want to look at for a possible support resistance. Now, what is the level here that we're looking at? Well, if we go back to our basics as far as support resistance levels, this is our lowest level. We don't want the price action to break this level. Price goes up, comes down, goes up, breaks this high, and then now we don't want to break this level. Goes up, comes down, goes up, breaks this high. The job of this low is to break the high. Once it does, we move this up. Now notice I'm only doing the candle body closes. Most traders use the wicks. What I do is I create a zone. I create a zone from the candle bodies to the wicks. So this is my zone that I see and that I use. This is my zone. And let's go ahead and color in the zone just a little bit. Now, we don't want the price action to cross below this. Then price goes up, broke this level, so this is good. Came down, and then now price came up again, broke this level, which is good, then started coming down. Now, I'm going to leave this one here because I can already see that this was a very nice level, but we would have moved this up here, and we would have this right here. We would have extended this just a little bit. Do our little box once again, our rectangle, put this over. So now let's look at this. Price broke the trend line that we did. This is not bearish. It just means that it broke the trend line. This is the first step. There are several steps. Well, this is the first step of a possible trend change or a trend reversal. This is the first step. It's not verified until it breaks the previous low. This low is now very strong because the job of the low is to break the high. It did. Once it did, we created this zone, this level, very strong level. We're looking for a bounce here, and it did. And we're looking for a potential high, higher low, higher high, higher low, higher high, breaking this high, and now we're back on track. Now we created another trend line. Now, because it broke this level and it came down here, this is our next level that we don't want it to break. Each level that it breaks is just gain strength for the trend reversal. Here it breaks this first one, okay, level 1. Breaks this next one, level 2. Breaks the next one, level 3. Breaks the next, level 4, DEFCON 4, whatever you want to call these levels. Just know that every level we do, it's getting stronger and stronger. Here we broke it, we retest it, bearish retest, found support. Okay, this might be a reversal. We're now potentially downtrend. We broke this. This is the very start. So in order for this to be confirmed, just like this up here, we need to break highs. So it needs to break this high for an uptrend, needs to break this high for an uptrend, needs to break this high for an uptrend. You see how all this is coming together? Everything that we're doing is building on each other. Higher the trend line, the higher time frame the trend line, the stronger it is. The lower the time frame, the more ups and downs you're going to see. And just because it breaks a trend line, whether it's on a 15-minute, a 5-minute, a daily, that doesn't mean it's done. It's over. The uptrend or downtrend is done with. It means that it might start potentially, that's step 1, of being a possible transition phase of a possible reversal. What we have to do for confirmation, for validation, is actually break the level of support. If we're in an uptrend, we have to break this level of support, and just the opposite if we're in a downtrend, we have to break the level of resistance as it's possibly reversing. It does look like it's reversing, comes up here, does a higher high. Okay, so same scenario. Here's our low. Here's our low. Came up, down, up. This low took out this. If we go to a lower time frame, you can see this. Came down. So we don't want it to break this level now once it comes up. And then sure enough, it broke the level. Now, this part gets a little tricky. Which one holds more strength? For me, I always go to the higher time frames. And let's just look where we're at. So we were right here. So there's not even nothing right here. This is, and let's go ahead and change this color just so we can know which one it is. We're going to do an orange. Let's go to a lower time frame, 4 hour. So in the 4 hour, it's something, but on the daily, it was nothing. So this, I don't want it to break. But if it does, to me, this is okay, because this right here was our very strong level that actually changed the trend. So this is the level that I would really be looking at. And if it does break this level, I'm looking at potential support here coming up. Broke right through it. Resistance in the zone, came down, tapped this zone, went up, broke out, but it started losing its strength. And throughout all of this teaching and mentorship, I'm going to be showing you about the strength of the move. Then we have lower highs, came down, broke this level now. Not good. This is our main level that we don't want to break. Sure enough, it broke it. So again, this is the methods on trend reversal, confirmation, validation of trends, and also trend reversals. And then looking at lower time frames, because once again, just like with patterns, there are patterns within patterns. Same thing with the trends. There are trend lines within trend lines. The bigger picture, the macro, then the lower time frames we go, we can see more of the ups and downs. We can see more of the movement, hence other trend lines, other support resistance levels. So we actually did this one in addition to, and identifying uptrends, it's when we're breaking the highs and not breaking the lows. And downtrends is when we're breaking the lows and not breaking the highs. And then for a possible transition phase, it's when we break the trend line, but it's still possible of a transition or a reversal from an uptrend to a downtrend. The confirmation or validation is when it breaks the actual low. This is part of market structure, and we'll be going over that later in the show as well. Now, as you notice, all of this stuff intertwines. And that's why it's extremely important to have a solid foundation so that you can build everything upon. I was going to put this on Patreon and charge anywhere, well, depending on the length of the segment, about $49 to $99 per series. So $49, $49, $49, $99, $99, $99. So do the math. It's a lot of money. It's a lot of money. And then bonus videos too. Now, what I'm doing instead is I'm doing this live stream so I could answer any questions that anybody may have with a super chat. That way I stay focused. So this is basically showing you that I do want to get rich with you, not because of you. Now, all of this stuff right here they're in the videos. They're in the live streams. Every single live stream has this stuff in it. So instead of I won't say wasting your time, because your time is very valuable, but the information I have on these live streams are extremely valuable. Instead of spending countless hours of watching all these videos, I'm wrapping it all up into one video. Everything that I say is from experience. This is what's going to save you so much time, so much money, and so much effort. I have videos that are 3, 4, 5 minutes long on average. If you want to make money, I will show you how. I would strongly recommend getting the VIP. You're going to make money. Now, granted, none of this is financial advice. It's never hopes and dreams and empty promises, nothing like that. See what I do. See if this makes you money. I give you my real life experience based off of my trainings, based off of my teachings, what I would do at that moment versus what everybody else does, because they want to sell you their course. They want to sell you all that stuff. I show you that my stuff works. Do we win? Yes. Do we lose? Sometimes. That's part of the game. But what I do is I show you all this so that you can see, oh man, I lost today, but Joe said he lost too. So it's okay. That's what I want you to realize, guys. If you like the content that I provide, make sure to smash the like button, subscribe to the channel if you're not already, and leave me a comment in the comment box. And I'll see you on the next video. And as always, let's make this money.